Thanks for joining. Today on the WealthRabbit Podcast, we're excited to share a certain milestone of retirement investing in WealthRabbit. WealthRabbit is now the first retirement plan to offer actively managed simple IRAs that can include dedicated crypto allocations, and these are powered by Bitwise. Joining us today on the show, we have Matt Hougan, Chief Investment Officer of Bitwise. Jason, Adam, you guys want to talk a little bit about how this came to be?
We wanted to add crypto into our portfolios. I think it's important to do that. And you'll hear Matt talk about why everyone should have crypto in their portfolio, at least a little bit. And we were really looking for the industry leader that could help us design these portfolios. And Bitwise we think, is the industry leader. So we're super proud and happy to be partnering with them. And Matt will talk about that later. But just having the leader in the space design portfolios for us is really special. And we are, if we're not the first, we're one of the first to have actively managed crypto portfolios, giving access to our customers for that. So we're really proud of that and excited about that as well.
Yeah, I think the big key word there is access. Giving access to folks, professionally managed crypto portfolios by the leading expert, Bitwise, in a space that is just so unknown, and it really takes an expert to know. I mean, you talk to people and they talk to you about crypto, but unless you do hours and hours and hours and hours of research, it's really hard to understand. So just like any other investment, it's about partnering with the right people who know the right stuff.
Thanks for joining this episode of the WealthRabbit Podcast. Today we have a special episode for you. We've got the WealthRabbit co-founders, Jason Ackerman and Adam Ackerman, here as well. And our special guest today is Mr. Matt Hougan, the Chief Investment Officer of Bitwise. And we've just made an announcement with WealthRabbit and Bitwise that together we're offering retirement accounts that include exposure to crypto assets through Bitwise. So we're thrilled to have you join us today, Matt. Now, one of the things I'd love to hear you talk about is I've heard you mention in other interviews that the fact that we're still early to invest in this particular asset class. And I was wondering, what are some indicators that you look at to make that assertion?
Yeah, absolutely. Well, first, it's great to be here with you guys. And it's been great to work together on the models. It's been really exciting. I'm excited about what they mean for clients and how they can get exposure to this fast space. There are probably a dozen metrics I could point to that suggest that we're still early, but I'll give you the biggest one. When I go and speak to the largest financial advisor conferences in the world, rooms with 500, 1,000, 2,000 advisors who are managing wealth on behalf of tens of thousands of clients, and I ask them, how many of you have exposure to crypto in client portfolios? It's not zero, but it is way less than 50. It's 10 to 20% of the forward-thinking advisors. And these are amongst independent advisors who tend to be the most forward-thinking. Until that room is 70% of the hands go up, we're still very early. So look, I think ultimately every portfolio or nearly every portfolio will have exposure to crypto. And today, for institutional investors, professional investors, it's maybe 10%. Until we're at least 50 or 60, it's still very early in my book.
Yeah, man, I think you bring up a good point of when you go to advisor conferences and you see a room of 500, 1,000 advisors who are independent, like you said, they're the most forward-thinking advisors out there. What happens to the crypto space when the wirehouses start to, actually take on this asset class, and where do you see, Bitcoin, Ethereum, and all the other currencies moving at that point?
Yeah, I mean, I hate to be reductionist about this. I should pretend to be a very sophisticated CIO, but ultimately, crypto prices are set by supply and demand. And as you unlock these multi-trillion-dollar markets and they start to allocate, and they follow the same path that every investor in crypto has followed, which is first they allocate a little bit, then they tell their friends, they all allocate, then they increase their exposure. That's going to be more money funneling into the crypto market. So you take something like Morgan Stanley controls up to $10 trillion in wealth. And you imagine a world where 2.5% of that is in crypto, right? That is an awful lot of money that has to go into a market. That's $250 billion that has to go into a market where Bitcoin's a $1.5 trillion asset. That is a very small door to push that much money in. So the short answer to your question, I think, is the price goes up because people have to buy a scarce asset. And those wirehouse approvals are just now starting to crack open. It'll take them years to really get up to speed. But make no mistake, the train is coming, right? They will all eventually have exposure. And yeah, that's going to be great for prices.
Yeah, I mean, you can think just 4 or 5 years ago, some of the biggest CEOs in the banking industry called Bitcoin a hoax, and a year ago they're all on the stablecoin train. So people come around, I guess.
It is remarkable. I try to give them a little bit of grace because most of us in crypto started from a position of skepticism, right? A lot of people first heard about Bitcoin in a negative sense. Even Michael Saylor or people like that started, and they all converted. The Wall Street CEOs are converting later than they should have. But make no mistake, they're converting, right? Larry Fink says Bitcoin could challenge the US dollar globally. He says all assets should be tokenized. This is the CEO of the world's largest asset manager, right? Who's building a huge division in his business behind this. And I think that's starting to wake people up that this is a very real thing. It's getting increasingly real world. And it makes me pretty excited.
Appreciate that. Thank you. You bring up a couple interesting things were brought up there, tokenization and also the stablecoin idea. I'd really love to dig into that, but if you wouldn't mind first addressing some of the general FUD, fear, uncertainty, and doubt in the marketplace right now. I know you've written articles about how you believe we're in a crypto winter at the moment. At the same time, you often reference that there's a certain negative sentiment about crypto in general that people can have. I think there's a number of, you could say, misinformation or counter narratives to the crypto idea. And how would you address some of those? So how would you address, let's say, the question of Bitcoin or cryptocurrency being somehow bad for the environment? That's one of the counter narratives people bring up a lot.
That is a classic one. So, the reason people make that argument is that the Bitcoin mining network expends a fair amount of energy to secure the blockchain. Other crypto assets, Ethereum, Solana, use a different consensus mechanism to secure the blockchain without energy use. They're like the electric cars of crypto, and you still have the gas-powered car, which is Bitcoin. So not all crypto assets even consume energy. But if you go beneath the surface and you dig into the data, what you see is that Bitcoin has the highest renewable energy mix of any industry in the world. And the reason for that is that Bitcoin can be mined anywhere. And if you have a hydro plant or you have a solar plant in the middle of the desert that's a long way from the grid, they usually have excess energy. And what's actually turned out to be true is the Bitcoin has become a major catalyst for renewable energy building, right? It makes building a renewable energy plant more profitable because when you're not supplying energy to the local town, you can lower your costs, you can increase your revenue by mining Bitcoin. And this is true because even the World Bank, which is sort of structurally oriented to hate Bitcoin and used to raise this eco-FUD against Bitcoin, has come out and said, in practice, it's actually driving more renewable energy growth. So it's one of those up is down things where actually Bitcoin is good for the environment. And I think people are coming to realize that.
Fascinating. Thank you. And another one occasionally gets brought up, the quantum computing risk. The new era of high powered chips are somehow going to be able to compromise the network.
Yeah, so this is one of those theoretical risks that if we ignored it forever, it would eventually lead to some disruption. So the risk here is that the core cryptography that underpins like a Bitcoin wallet is based on the law of large numbers. If you can guess a big enough number, you could crack that wallet. It's just that the numbers are so big that a standard computer would take 30 billion years to do so. So never going to happen. The theoretical risk with quantum is if you had a really big quantum computer, it could guess everything at once and hack those wallets. There's two reasons that's not a practical concern. The first is that same cryptography that underlies Bitcoin underlies your bank account, underlies all military communications, underlies how the internet works. So if we build this giant James Bond quantum computer tomorrow, boy, we have a lot to worry about, not just Bitcoin. And the second piece of that is because we know it's coming, we can prepare for it. It's not an unsolvable problem. It's a problem that will take work and that can be solved for. And as long as we do that, the network is the same, is going to be okay. People my age and older may remember the Y2K bug, where we were all worried about computers crashing when we got to the year 2000 because you needed to put 20 at the front of dates. People mitigated that, and then the new year happened and nothing happened. I think that's going to be what happens with quantum. We know it's coming. We're going to solve for it. It'll be a big pain to solve for it, but we'll get through it. It's not going to change anything long-term about Bitcoin.
Awesome. Thank you. I have one other crypto FUD related question, and I believe Adam has one specifically about short-term price fluctuation. What would you say about how the world of crypto seems to be relatively politically polarized right now? How I believe it started as something that's completely apolitical, if not. There were elements of anarchy, of like, oh, we have our own currency, we don't need the government anymore. But it's really become a political talking point so much these days, and I feel like it doesn't need to be politicized, but it seems like that's how it's happened. Any thoughts on where the future is with that? I mean, I think there's certain people on both sides of the aisle that benefit from the technology. I see it just like any other technology. There's no reason it should be a right or left thing.
It definitely shouldn't be a right or left thing. It's a neutral technology. I would actually argue it's a progressive technology in that it tends to enable individuals, right? Like stablecoins, if they were allowed to accrue interest, would benefit the people who can't access bank accounts. It's a weird world where it's become so political that now you have parts of the liberal side of the world trying to restrict the ability to do that. So it is unfortunate. There is a lot of hope for me, though. If you look at the underlying data, like you look at the Stablecoin Act called the Genius Act that passed through Congress in 2025, it was one of the most bipartisan pieces of legislation to go through Congress that year. It was one of the few things both parties could agree on. Because while the extremes of the party, the Elizabeth Warrens, and parts of the Republican Party may make it political, most people realize it's just a technology. And actually, the data suggests that people who hold crypto are roughly equally split between the parties. So I think it's going to be okay. I'd add one more sort of Machiavellian twist to it, which is now you have BlackRock and other big firms building in this space. So it's not like the genie's going to go back in the bottle. When you have the largest financial institutions building on blockchain, you're not going to get like Senator Warren's war on crypto. That's just gone. We're not going to go back there. So it shouldn't be political. It's just a technology. It'll make the financial system better, faster, cheaper. That benefits everyone. And ultimately, I think that will win out. But it is unfortunate that it has this political aura around it. I don't think that's good for anyone.
Yeah, Matt, do you think President Trump nominating Kevin Walsh as the potential new Fed chair, you think that has any ramifications on crypto?
I think it's strictly good for crypto. So Kevin Walsh is a fan of crypto. He's a fan of Bitcoin. He's called Bitcoin gold for anyone under 40. Full disclosure, he's a shareholder in Bitwise. I don't know if he'll have to divest that or not. But it's always good to have people who understand crypto in positions of power. And what we're going to have is a Fed chair that understands crypto. We have an SEC chair that understands crypto. We have a CFTC chair that understands crypto. We have endorsement from the broader organization. So I think all of that is generally positive. There's been some chatter about whether he's hawkish or dovish. I think he's probably more dovish than the market gives him credit for. But look, broadly speaking, I would keep your eye on the prize, which is we're going to have pro-crypto people in all the leading regulatory seats. That's good for the industry long term.
Yeah, I did not know he was an investor in Bitwise. As Charles and Jason know, I listen to Bloomberg Surveillance every morning, kind of going into the office, kind of getting my day ready, just figuring out where the market is today. Last couple days, we've had two separate people on there calling Bitcoin to $10,000. I just want your take on that short-term price fluctuation and, how to erase the noise from a lot of the talking heads where you hear on the news and media.
Yeah, I mean, predictions cost nothing to give because people forget if you're wrong. So I think people are trying to make outlandish predictions. Look, the best map to where Bitcoin is going is to look where it's been. Historically, we've had these classic crypto winners. They've involved 50 to 75% drawdowns. And then the market has recovered and done exceptionally well. If you bought at the end of the 2018 winter, you're up 2,000%. If you bought at the end of the 2022 winter, you're up 300%, even after the recent pullback. I see no reason why this will be any different. Could it go lower than it is today? Of course, it's a volatile asset, but there's nothing that's fundamentally changed about it that would make me think it would go back to $10,000. Boy, I would buy every Bitcoin I could if I had that opportunity. I don't think I'm going to have that opportunity. So this is a completely normal pullback. It's within the bands of what we've seen in the past. There is still institutional interest in investing in Bitcoin. There's still Wall Street building on Bitcoin and on crypto more broadly. I don't know how we get back to 10 grand, but again, it could fall from here. I'm not saying it's straight up and to the right, but the long-term outlook is really strong.
Well, so you talk a little bit about the 4-year cycles that seem to be playing out again. I know some people are kind of on the fence. They think like, oh, well, that's a thing of the past. It couldn't really be that simple. But it seems to be almost a self-fulfilling prophecy at this point that enough people do believe it, that it's becoming a predictable thing.
Yeah, I think that's right. And just to make that a little bit more human, because look, when I put on my logical hat and I diagnose what drove the 4-year cycle in the past, I don't think it still applies. But here is the real human experience. If you look at crypto historically, it has moved in this 4-year cycles of 3 big up years and a pullback year. The pullback years were 2014, 2018, 2022. We can all do the math. The next one is 2026. We're living in it, right? So right on schedule. And I do think it's a self-fulfilling prophecy, because even if I could talk your ear off analytically why it shouldn't repeat, because interest rates are coming down, not up like they did in previous cycles, or because the Bitcoin halving is less important than it was in previous cycles. So all that logic is true. But if you bought Bitcoin at $10 and you made $100 million and you've ridden it for 13 years, and twice in your experience, you've seen your wealth fall by 70%, and you were heading into the tail end of that 2026 cycle, are you telling me that you would put the logic hat on your head and say, I'm sure I'm right, I'm just going to sit through it even if it pulls back? Absolutely. No, you're human. You would take some chips off the table. And that's what we saw. We saw long-term holders who had much high appreciation sold about $100 billion of Bitcoin. Do I blame them? I don't blame them. I would probably have done the same thing in the same circumstance. So it is annoyingly reflexive. It's happening because we thought it would happen. That sounds dumb. But I think if you put on the real human hat, you can imagine why this happened, right? And importantly, it also happens on the other side, because now we're getting to the point where people start to look ahead to the next 4-year cycle, and they start to convince themselves that there are reasons to be bullish. And I think they'll do that as we move deeper into the year. So look, I wish it hadn't happened. It did happen. I think it happened for very human reasons. And I think, we will recover and then go to new all-time highs, just like we have in the past. At least that's my base case. Not a guarantee, not financial advice, but that's what I think could happen in the coming future.
Jason and I, we talk to people all day, clients, and we're getting asked questions about crypto, which is great. And they're getting, who knows where they're getting their crypto advice from. It might be their Uber driver. It might be person at the grocery store. So, people are interested in crypto, and we found out that people don't know how to get into it responsibly. So can you just touch base on, like, from a retail investor, like, why Bitwise, why trust you, that kind of thing?
Yeah, absolutely. Well, I think the thing you point out is exactly right. People are interested in crypto, but it's confusing in how to access it, right? There are a large number of crypto assets. Which ones are good? Which ones are bad? There are crypto equities that provide exposure. Do you want that, or do you want the crypto? How do you build these into a sensible portfolio? These are complex questions. The reason Bitwise, I think, is well positioned to answer those questions is, look, we're one of the largest crypto-only asset managers in the world. We look after $15 billion across ETFs in the US and Europe, SMAs, staking services, vaults. We have close to 200 people now who spend 24/7, 365 living and breathing this stuff. And importantly, we've been doing it for 8 years now. So we've managed through bull markets, through bear markets, through hostile regulatory regimes, through more permissive regulatory regimes. We have relationships with all of the leaders in the space. And we're sweating the details day, night, and weekends, right? We're visiting custodians. We're talking to trading firms. It's literally all we do. And I think for that reason, trusting a specialist manager makes a lot of sense. There's certainly areas of the market that are extremely well established where we have a wide variety of choices that are easy to make, right? Everyone knows what the S&P 500 is, and maybe people have exposure to that. Within crypto, it's a newer market. It needs sort of specialist expertise. And that's what we hope to bring to bear in managing and designing these portfolios on behalf of your clients.
I got a personal question. So you mentioned earlier that everyone was a skeptic at some point. So I'm interested to know, like, what changed you? What was your aha moment for crypto?
Man, I'll tell you a brutal story, Jason. Before I joined Bitwise 8 years ago, I've been here almost since the beginning of the firm. I ran a company called ETF.com, which was the first ETF data ratings media site in the world. Eventually sold that business before I joined Bitwise. But in 2011, when I was running that business, I had 8 young CFA analysts working for me, analyzing the ETF market. And to train them once a week, we let them lead a meeting on a topic of interest. It could be an area of the market, whatever. In February 2011, Bitcoin crossed $1. And one of my analysts led an hour-long meeting discussing what Bitcoin was. And if I had left that meeting and bought 100 Bitcoin, right, I'd own the Patriots by now, right, if I had put $100 to work. But I didn't. I went and got a coffee. That coffee cost me like $500,000. So that is my sad story. But at least he went on to be the first Wall Street analyst to cover crypto at Needham & Company, and then a major crypto VC. So he led a very nice, he lives in a very nice house. So that was my first introduction. That was when I blew it. So there's my I blew it story. I actually started to get serious about it in 2013. And the reason was, that was actually the year the Winklevoss twins filed for an ETF. I didn't know the Winklevoss twins from Adam, but their lawyer was a woman named Kathleen Moriarty, who was the first lawyer on the first ETF in the world, SPY. And she was a good friend, and she was a legend. And she actually took me aside, I can remember it to this day, and said, Matt, this is something you have to take seriously. You're not paying enough attention to this. And that was all it took. It was one person, because at the time Bitcoin was like a circus, but I had really a legend in the legal field tell me that this is an important thing. And that's when I started to pay attention to it, when I started to take it more seriously. And I think that's what happens. I think people who are negative on crypto have not taken the time to take it seriously. They're just like, Bitcoin bad. And I was in that camp. But if you have one person to sort of grab you by your cuffs and say, hey, actually look at this, it's incredible technology, I think that can be a game changer. So I owe it to Kathleen.
If you were just getting started in crypto, and you mentioned earlier we all need to have some exposure to it, like, what do you think is a good percentage that should be in your overall portfolio?
Yeah, I think for most investors, particularly when they're getting used to it, you can think of crypto almost like hot sauce. I like a little Cholula on my tacos. But if I had a bowl full of Cholula, it would lead to indigestion. And I think that's a reasonable framing for most investors. The math answer to your question is we find most people comfortable in the 2.5% to 5% range. That's the range where it can have a material impact on your portfolio. But if you have one of these 50% drawdowns, it doesn't cause your whole portfolio to collapse, right? You can tolerate that loss, because the biggest risk in crypto is actually that it's so volatile that you panic at the bottom or you chase it as it runs up. You want to avoid those behavioral risks. So look, my own personal portfolio is like 30 or 40% crypto, but this is maybe not a do as I do sort of moment. It's maybe more a do as I say. For most investors getting into the space, somewhere in the 2.5% to 5% range is great. We see people at 1, we see people at 10. Above that, you introduce a lot of volatility, and I think you have to think seriously about if you're personally prepared for that volatility. If you are, higher allocations can be interesting too.
Thank you for that. Now, I've heard you mention something about the fact that like a neutral stance on crypto exposure is not zero. So can you elaborate on that a little bit? That if you have zero, that's actually a negative stance. That's actually you saying like, I don't believe in this.
That's exactly right. So I'm a Jack Bogle, the founder of Vanguard Disciple in crypto clothing. But I think the starting point for any investor should just be to own the market, right? Own all the stocks, own all the bonds, own real estate, and own crypto. If you don't, you may over or underweight something, but that's an opinion. The starting point should just be to own the market. The point I've been making with that zero is not neutral is that crypto is a $2 or $3 trillion asset class, right? Stocks are 110 trillion, crypto is 3. If you're at 100% stocks and 0% crypto, you're off market, right? If you're 100% stocks and 0, you need to be 2.5% crypto just to be neutral, right? That's just the market opportunity. And I think that can help people realize that you're not taking crazy risks. You're just aligning yourself with Ray Dalio and the Harvard Endowment and the Abu Dhabi Sovereign Wealth Fund and a lot of sophisticated investors who have decided having a small allocation to crypto makes sense. So it's a really important point. Zero is short. It'd be like not owning any of the Mag 7 stocks. You can make that decision, but then you're missing a big chunk of the equity market. If you don't own any crypto exposure, you're missing a big chunk of one of the fastest growing, most disruptive technologies in the world. And I just think that's a big statement to make.
Yeah. Well, and that makes me think about like, it's not just one thing either. It's not like just cryptocurrency or just Bitcoin. If you believe in the asset class, then there's all these different use cases that go along with it. Like you talked about tokenization, stablecoins, smart contracts, whatever you want to get into. They're all separate use cases. If any one of those is a major success, then you want some exposure to that, right?
That's exactly right. Look, crypto is about reinventing finance. And there are various markets, right? Bitcoin is trying to reinvent gold. Stablecoins are reinventing dollars. Tokenization is reinventing how stocks work. Platforms like Ethereum and Solana are reinventing how those assets move around the world. DeFi protocols are reinventing how banks work. As you said, you only need 1 or 2 of those disruptions to take off, and the whole space will grow tremendously. I think all of them will take off. I think the right analogy is the internet, right? When the internet started, it was, what did Bill Gates describe it as? A good place to like store your recipes. That is true. I cooked a cheesecake this weekend off a recipe on the internet. That is a true use case. But it turned out there was a lot more you could do with the internet. You could shop, you could do business, you could do Zoom calls, you could do podcasting, you could do social media. Crypto is the same thing. It's going to reinvent, I think, all parts of the financial ecosystem. So I think you want broad-based exposure to all of those things in a relatively diversified format. That's actually sort of at the core of how we've built these portfolios, is providing that diversified exposure to all of these different use cases that are bubbling up in crypto.
Yeah, I think that's really what makes what you do unique is you referenced the Jack Bogle and crypto clothing. You're taking traditional financial principles, traditional investing principles, and you're applying them to this new asset class, which is another counter narrative is that crypto is gambling. It's not gambling when you apply these kind of principles to it. And if you could talk about that, about how
you can make that case for stock investing. I mean, you can
exactly.
make
Sure.
in our industry, like in the wealth management space, there's been is active better than passive? Is the mutual fund better than just an index fund? And in our view, it's maybe a little bit of both. And I think that's kind of, I want to speak from Matt. That's kind of what Bitwise does. Is they see the whole market, and they build the portfolios for that.
Right.
So
it's exactly right. I mean, this is just another asset class, which means you need to treat it like any other asset class. You need to diversify. Your probability of success improves the longer you hold it. You probably want to rebalance it in your portfolio. You need to think about it as part of an asset class mix. You can't look at it on an isolated basis, right? Crypto is volatile, but if you put it into a portfolio, historically, it actually hasn't increased much the volatility of the overall portfolio. You just need to treat it like you do any other asset class. And if you do, it looks really attractive, right? It's liquid. It's not very correlated with other assets. It's had good historical returns. It's an interesting technology disruption. It has a place in people's portfolios. There's nothing actually that unique about it. It's just another area of the market. And I think when people remove the emotional weight associated with Bitcoin or with crypto, and they just look at it for what it is, they realize, yeah, this can go in a portfolio, and historically it's done great. It'll go up and down like everything else, but it probably has a role to play.
Yeah. Well, and that's perfect. And what that's making me think about is, a key differentiator of WealthRabbit and also you is that the active management component of it, and crypto exposure through Bitwise with WealthRabbit. Can you talk about why professional management matters so much in digital assets compared to traditional asset classes?
Yeah, well, it's less established, right? It's less established, it's less new, information is less evenly distributed, and it's evolving and changing really rapidly, right? There are new ETFs launching. Do you incorporate them or not? How long do they have to season or not? How do you weight them or not? These questions are less answered in crypto than they are in large cap US equities, which is not to say that there isn't space for active management in large cap US equities. Of course there is, but that is a very competitive, difficult area of the market, right? In crypto, you really do need professional oversight to keep up with the market. And then really importantly, actually something we're pretty proud of, to avoid the blow up risks in this space, because it is an emerging environment from a regulated perspective. And there have historically been some issues. Bitwise is proud that we never had exposure to FTX. We screened that out as for the very risks that ended up blowing it up. We're proud that we never have an exposure to Luna, which was a stablecoin asset that got to be very large and then collapsed because it was poorly designed. So we take a lot of, there's sort of two sides to active management. There's getting exposure to the best opportunities. We definitely do that by staying up to date on the market. And then there's actually screening out the worst in the market. And in some cases, that negative screening is actually where a lot of the value comes in. Maybe it's not as sexy as finding the next hot thing, but we put an equal emphasis at Bitwise on those negative screens to avoid the assets that we see as having sort of significant binary or blow up risk. And that's an element of active management that I think is really important too.
That's
good. I mean, eliminate the fat tails. That's how it is in the equity portfolio. PM wants to eliminate the fat tails. If you can eliminate the fat tails, you're going to have a much higher chance of beating whatever benchmark you're trying to beat. So
that's exactly right. Yeah, maybe sometimes that alpha is easier to find than the other side of that.
Talk a little bit about what for me personally, I'm a believer in crypto, but I don't want to. I'm very scared of holding a wallet and having it myself. And that's really what I think draws me to Bitwise personally. So talk a little bit about that, why, like, what you guys do to take that risk out from someone like me.
Yeah, 100%. It's really important because there is a lot of risk with holding crypto yourself, right? If you hold crypto yourself, you have a password that unlocks that crypto. And if someone steals that password, they can make off with your crypto. And that can be scary. You could misplace that password. That would feel really bad. Somebody could hack your phone if you have like the Coinbase app and steal your crypto. I keep fantasy football fees in crypto on my phone, but I don't keep most of my investments because I could leave this at the gym and somebody could hack into it. It's a scary experience. At Bitwise, what we're doing is completely different. We only use qualified custodians, which are federally or state regulated entities that have insurance in place. We visited them and tested their procedures. They're bankruptcy remote entities, such that if something went wrong with the parent company, you would still have rights to those assets. We use multi-factor and multi-human testing so that no one person can make off with your crypto. We have whitelist restrictions on where crypto can go if we sell it. So it can't just go anywhere. It can only go with one particular person. So we've put in place the full institutional infrastructure to look after and protect that crypto. And that's why for 8 years, we've never had any loss. And we feel very confident about that going forward. I make an analogy between like carrying a wallet and having money in the bank. If you carry a wallet, it may be convenient. And I keep like, $20 in my wallet. But if you lose your wallet, it's gone. The same is true with crypto if you're like keeping it on your phone. It's convenient, it's easy, but if you lose it or have an issue, it can be gone. Most people keep most of their wealth in bank or brokerage accounts because it's more safe and secure. In crypto, the analogy is keep it with an institutional custodian. So Bitwise does all that work on the behalf of our clients to make sure that that's the case.
Yeah, and I'll say, my father-in-law unfortunately passed away, and he just had access to crypto via Coinbase, and it's like we can't get it now. So just going straight through a Coinbase or something like that, you don't really think about that side of it either. And that's a big benefit of having exposure via ETFs and Bitwise through your brokerage accounts is you can set up beneficiaries and prevent that from happening.
That's exactly right. Yeah, we've heard those stories more times than we can count. And it's really unfortunate. Yeah, the benefit of putting it in an ETF is then it works like every other ETF that you hold, right? And it's easy to fit into your financial plan. It's easy to pass on to heirs. It's easy to do things with. Look, crypto is risky enough without taking on extra risk is one thing that I like to keep people in mind. So, what Bitwise tries to do is make all that simple, safe, regulated, and familiar, so it works just like any other exposure.
How would you advise someone who is, they're new to the space, they're interested, but they want to, maybe they need to come to that aha moment themselves. What do you typically advise people to look to learn more about the, this whole asset class?
Yeah, I think so. The first thing I would say is go to highly trusted organizations for your information. Bitwise actually has a full suite of information. We have a sort of Bitcoin and crypto 101 section that you can gain access to, but we're not the only ones. You can go to other reputable asset managers that have written about this. I wrote a publication for the CFA Institute, an intro to Bitcoin, crypto for financial advisors. You could download that. But the skin you should operate on is go to high quality information providers, because there is a sea of information in crypto and not all of it is good. So find someone that you trust, whether it's Bitwise or another well-known manager, and look at their material. That's a really great place to start.
And Matt won't say this, but I'll say it for him. His newsletter is great. I read his newsletter every time it comes out. So, it's very easy to understand, very easy to read, and gets you exactly like talking points and allows you to understand where we are in the market. So
I appreciate that. It's a labor of love. I try to keep it short too, 1,000 words or less, because I know people are busy. But yes, we write a newsletter over at Bitwise Investments as well.
How do you subscribe to that?
You can go to bitwiseinvestments.com/CIO memo, and put in your email address. And my favorite thing about that is the only email you'll get from us is the CIO memo. So there won't be marketing spam. That was one of the conditions I put on that because I wanted people just to get what they want. So bitwiseinvestments.com/CIO memo. It's a weekly read. Would love for you to sign up.
Well, I've got questions. What are the questions, that we should be asking? Maybe not just you, but like other crypto, if you're thinking about investing, like what are the questions we should be asking about crypto?
Yeah, I think, a lot of the questions we get are around what are the most exciting growth areas of crypto. A lot of questions about the growth of stablecoins and tokenization and DeFi. We definitely get questions like, why does Bitcoin have any value if it doesn't have cash flow? If people are at that phase of their learning, that's a good place to ask. In terms of asset managers, you really want to interrogate their strategy and their custody the same way you would any other strategy and custody, right? Does it make sense? Is it backed by rules and logic? Do they have the team in place to do that? So those are some of the questions that we get. A lot of people want to know if the price is going to go up tomorrow. Unfortunately, I can't tell you that. I do think there's a strong case to be made for the price going up over time, and that's what I invest for, is for the long haul.
You have a long-term price target?
We do, yeah. We think Bitcoin will get to 1.35 million by 2035, so within 9 years. For what it's worth, just to put that in context, because that's a big number, the basis of that is we think the gold market will continue to grow as it has over the last 10 years. It's been growing about 6% a year on average. So we think that will continue to happen. And we think Bitcoin's share of the store of value market will go from about 7.5% to 25% over 10 years. It's not an outlandish thing, right? 7.5% to 25% over 10 years. We've gone from 0 to 7.5% over the last 10, basically, or 1. So we've 7x'd. We only need to 2 or 3x. And if you do that mathematically, every Bitcoin's worth 1.35 million. So I don't think it's an extreme number. And it goes back to sort of the question we started at the beginning. Are we early? I think we're super early, right? We're 6% of the store of value, 7% of the store of value market. I eventually think will be the majority of it. So that's our target, 1.35 million by 2035.
Thank you. I just keep thinking about the whole 4-year cycle thing earlier. You were talking about how, it really is like a human behavior versus logic kind of a thing, it feels like. Because like if you look at it on paper, like there's all this, like when you compare this cycle to the last cycle and how different things are, like on a large scale, like you have these large scale institutional investors that are all creating ETFs around this product. You have political climate's favorable to it. There have not been sort of large scale explosions like FTX and Luna and other, things just, falling apart like last time. So it's interesting to see that, the way it plays out this cycle.
Yeah, it really is. One of my favorite investing truisms is that in bear markets, good news gets ignored, but it doesn't get forgotten. It gets stored as potential energy for when the bull market returns. And I think that's what's happening right now. Look, we're in a crypto bear market. We're in a winter because of the 4-year cycle. But we have all this good news. We have BlackRock building on crypto. We have the chair of SEC pushing us onto blockchain-based rails. We have tokenization going from $20 billion to $200 trillion. We have institutional DeFi and investments into that space. All of that will be dry kindling for when the bull market returns. So again, in these bear markets, that news gets ignored, but it doesn't get forgotten. It gets stored up, and then eventually it gets released when the market turns. I think that's what we'll see as we get toward the end of this year and into 2027 and beyond.
Yeah. And I suppose your price target, is that considering you're expecting some version of regulation through something like the Clarity Bill to you think you need that to happen in order for it to grow the way you want it to grow?
Great question. No, I don't think it needs to happen, but I think it will change how fast we get there. So if we get the Clarity Act passed, and we're actually hearing good things in the market even today about that getting passed, it'll provide a really firm regulatory foundation. And I think investors will make a lot of positive assumptions about what's going to happen in the future. So they'll sort of front run that development. If it doesn't pass, I actually think crypto is inevitable. Like, I think the market wants to move on blockchain based rails. I think the world is increasingly digital. I think we'll get there eventually, but it will sort of push out how long it takes the market to respond to that. So look, the 1.35 million, I'll say, regardless of the Clarity Act, but whether we sort of go like this or go like this, if you're listening, I just made a shape where we go high fast and then high slow. I think that will depend in part on whether the Clarity Act passes.
Well, talk about a little bit about our crypto models themselves. You know, you're just launching these. We're one of your first customers that are doing these managed crypto portfolios. You guys have done ETFs for 8 years and ETPs and other stuff, but kind of talk about this next step of moving into model portfolios.
Yeah, well, part of it came from conversations with you. You were a big instigator of this push, and we really appreciate it. I think the problem is people want exposure to this space. There's an increasingly confusing array of crypto ETFs out there. How do we put them together in a way that makes sense and let people pick and choose the one that makes the most sense to them? So, there are a variety of different models available, from simpler models to more complex models. And they're designed to be monitored and managed, but relatively low turnover. And they're really just designed to simplify this market. I can't emphasize that enough, even for people who have come up to speed on the market and feel comfortable, but have other things to do in their life. There's going to be 100 more ETFs that launch in the next year. You need a full team to be evaluating that space and deciding if they get incorporated into the models. So there are a variety of models that we've developed with you, and they're all focused around giving diversified exposure to crypto, but which specific one you want depends on your goals and outcomes.
Yeah, and I think you hit the nail on the head, which is like most of us are busy and we don't know, like we know we want to be in crypto, but we don't know what to do. And that's why we're going to Bitwise. And that's why at WealthRabbit, we partner with you guys because we feel you are the leader in the space, and we trust you guys to help our clients, navigate that complexity. And so I can't emphasize that enough. And that's kind of our overall philosophy at WealthRabbit, which is, most people don't know a lot about investing. Let the experts do it for you.
It's exactly right. I mean, I don't try to fix my own car. They're experts in every area. And why not lean on them, particularly at reasonable fees. So we were really excited to do this with you. I think you guys are leaders. I think this is actually going to be a very large way that people gain exposure in the future. And you guys are at the very forefront of that. So congrats on being so innovative and forward thinking.
Thank you. We're excited to work with you and you guys. And you guys have been great partners so far. And we didn't even introduce Charles, but Charles is our resident crypto expert. That's why he asks all these questions. He knows the most about crypto than anybody.
Well, of the boxes I'm looking at, of the active,
not of Matt. Of us.
Present company.
I believe it. I believe it. There's a lot of expertise out there. I'm sure we could go another couple hours going deep into the weeds of the rabbit hole.
Well, before you go, is there a hot take that you want to? I know you had a price target, but is there a hot take that you on anything about crypto or Bitwise or Bitcoin or anything that you want to leave us with?
Yeah, I mean, it's actually what I just said, which is there is all this good news in the market. We learned yesterday the Abu Dhabi Sovereign Wealth Fund increased its Bitcoin holdings to over $1 billion. We saw BlackRock and Apollo investing into DeFi assets. BlackRock announced it was tokenizing all of its ETFs. The chair of the CFTC and the chair of the SEC both came out saying, there'll be all assets moving on blockchain-based rails. There's just an enormous flood of really positive long-term news. And in bear markets, people lose focus on the long term. And I guess if I had a hot take or a message, it would just be like, keep that long term in view. We're gonna go there. We've been through these pullbacks before. They've been great times to buy. It's not a guarantee this will be true again, but I feel very optimistic about where we're going.
Perfect.
Yeah, my hot take is if it goes to 10K, we're throwing everything in there.
I'm selling the house, man. I'm going all in.
All the rabbits we own.
Yeah, every rabbit.
That's right. Exactly. I love it for sure.
Well, Matt, thank you.
Yeah,
thank you for joining us. Thank you for the partnership. We appreciate your expertise and everything you've done for us.
I appreciate the opportunity. I look forward to working together with you and the clients for years to come.
Thanks so much. Any final plugs to leave us with, as far as we appreciate the newsletter, letting people know about that. Anything else, people follow you on Twitter, on LinkedIn, things like that?
You can follow me on X for sure, Matt_Hougan. My name is funny. It's got a U in it. So it's Matt_HOUGAN. No, I don't know why it has a U in it, but there you go. But I do post there occasionally and over on LinkedIn. So feel free to connect, reach out on those venues as well.
Perfect. Well, thanks for joining us in the Warren today. It's been a pleasure.
Thanks for having me. I've loved it.
Well, this concludes our episode. Thanks for sticking around. Again, if you'd like to learn more about the retirement accounts talked about today in WealthRabbit, you can go to wealthrabbit.com. And if you want to allocate to one of our crypto portfolios, you can decide what kind of risk tolerance level you're interested in and go from there. Any other tips for our listeners to learn more about this?
Yeah, just go to our website. The way we have it set up is you can invest in 5%, 10%, 20%, 50%, or 100% crypto. So we have that streamlined for you to where you have the option of how much crypto exposure you want to take and how much risk you want to take.
Awesome. And what was your note about the FUD thing? I had a missed opportunity with the FUD thing earlier.
Mr. FUD wants to kill his rabbits.
I can't believe I missed that. I can't believe I didn't bring it up like that. I have to review my notes better next time. That's
all, folks.
That's all, folks. That's all, folks.
The WealthRabbit Podcast is a production of WealthRabbit, located in sunny Rock Hill, South Carolina. WealthRabbit is the first digitized platform designed to make simple IRA management effortless. We're on a mission to empower small businesses to invest in their team's financial future without the headaches. No hidden fees, no complicated processes, just retirement planning made simple. Go to wealthrabbit.com now to learn more. The views and opinions expressed on the WealthRabbit Podcast are those of the guests and do not necessarily reflect or state the opinions of WealthRabbit. Comments and remarks on this podcast should not be construed as tax, legal, or other investment advice. Please consult your tax, legal, or investment professional. All investments involve risk. Past performance does not guarantee future results, including the risk of loss. Investments are not FDIC insured.